In this video, we're going to talk about the Treasury Warrant and attempt to answer the following questions. What is a warrant and why is it important? What types of accounts need a warrant? What does a warrant look like? What information is in it? How do warrants get issued? What information is needed to request a warrant? And where can I find it? What happens with warrants under a continuing resolution or in cases of error? Where do warrants fit in the budget execution process? And how can I find copies of Treasury warrants? So, what is a Treasury warrant and why is it important? GAO's glossary of terms used in the federal budget process defines the warrant as an official document that the Secretary of the Treasury issues upon enactment of an appropriation that establishes the amount of monies authorized to be withdrawn from the central accounts that the Department of Treasury maintains. So, we know from this that a warrant is a document issued by Treasury, and it's important because it allows money to be spent from the Treasury. What types of accounts need a warrant? The definition referred to central accounts. What are these central accounts? In order to understand this, we need to take a look at the Federal Account Symbols and Titles, or FAST book. This publication is the official listing of account symbols and titles assigned by the Department of the Treasury. If you're interested in checking it out, I'll provide a link to the document at the end of the video. In the FAST book, we will look at two major types of federal accounts: receipt accounts and appropriation and other fund accounts. Receipt accounts are used to identify funds collected into the Treasury, that is, income the federal government receives. Appropriation and other fund accounts are used to identify funds being paid out of the Treasury. To keep things simple, let's refer to these accounts as expenditure accounts. So, we have two major types of accounts: receipt accounts and expenditure accounts. As an aside, the federal deficit, or surplus, is calculated by comparing the income received into receipt accounts with the disbursements or outlays paid out of the expenditure accounts. Receipt accounts are separated into two major groups: federal and trust. Federal receipt accounts are further separated into general and special. Here is the listing of receipt account symbol ranges from the FAST book. It's important to remember that general fund receipt accounts are not earmarked by law for a specific purpose, while special fund and trust fund receipt accounts are. That means that funds collected into the general fund receipt accounts can be used for whatever the Congress wants to appropriate them for. For this reason, there's little or no relationship between the general fund receipt accounts and the general fund expenditure accounts used to spend the funds. Here we can see some of the receipt accounts used to collect most of your taxes. And here we see some receipt accounts for fees collected, like passport and patent, trademark, and copyright fees. To reiterate, all of these funds collected into general fund receipt accounts become part of the amorphous general fund and bear no relationship to the expenditure accounts used to spend this income. One other distinction I would like to point out: if a receipt account listed in the FAST book has a check beside it, like the U.S. Travel and Tourism Administration facilitation fees, It means the collection of the fee offsets the outlays of that particular federal agency, rather than the federal government as a whole. This is referred to as a distributed offsetting receipt and has to be accounted for in the financial statements of the relevant agency collecting the fee. Because special fund and trust fund receipts, unlike general fund receipts, are earmarked by law for specific purposes, they can only be used for the purposes of each special or trust fund. In these cases, the related special and trust fund expenditure account uses the same numbering system. Let's take a look at a sample of special fund receipt accounts. Here we see receipt and expenditure accounts for 3 HHS Cooperative Research and Development Agreements, or CRADAs. Note that the receipt accounts have a related expenditure account with the same 4-digit Treasury code. Each CRADA receipt account has a check mark indicating that these collections are distributed offsetting receipts and therefore offset HHS outlays. The double asterisk here indicates that these receipts are available. That is, no further action needs to be taken by the Congress or Treasury to make these receipts available for expenditure. This is an important distinction, so let's take a look at another example. Here we see the special fund receipt account for the transfers from the Presidential Election Campaign Fund 10-year Pediatric Research Initiative Fund in the National Institutes of Health. Note the matching expenditure account. But also note that while this is a distributed offsetting receipt, that is, it affects HHS outlays, there is no double asterisk identifying the account as available. That means that unlike the CRADA example, the authorizing legislation requires an action to be taken to make these receipts available to spend. Here's another example. Again, we see the special fund receipt accounts for the general fund payment by the Cures account and the matching expenditure accounts. Since there is no double asterisk identifying these accounts as available, we know that some action has to be taken to make these receipts available to spend. We'll return to this distinction between available and unavailable receipts a bit later when we talk about which accounts receive warrants and whether they're issued automatically by Treasury or after agency request. Let's take a look at a sample of trust fund receipt accounts. Here, we see a sample of the Federal Supplementary Medical Insurance, or Part B Medicare, trust fund receipt accounts. As you can see, there are many. For example, here is the receipt account for the federal contribution to Part B, and here is the receipt account for the premiums paid by beneficiaries. Note that all these receipt accounts collect funds for the purposes of the Federal Supplementary Medical Insurance Trust Fund, as represented in this trust fund expenditure account. The same distinctions we discussed in special fund receipt accounts regarding distributed and undistributed and available and unavailable apply here. Let's focus on expenditure accounts for a moment. Expenditure accounts are also divided into two types, federal and trust. And federal funds are made up of general, special, and revolving or management funds. Here is the listing of expenditure account symbol ranges from the FAST book. Note that general fund account symbols range from 0 to 38.99. Management, consolidated working, and revolving fund symbols range from 3,900 to 49.99. Special fund account symbols range from 5,000 to 59.99, and trust fund account symbols, both revolving and non-revolving, range from 8,000 to 8,999. Let's go back to our definition. So, what types of accounts need warrants? Since warrants establish the amount of money authorized to be withdrawn from these central accounts, it stands to reason that warrants are needed only for expenditure accounts. Okay, so we only need warrants for expenditure accounts. But what does a warrant look like? What information does it contain? Let's take a look at a sample warrant. The Treasury Warrant is Form 6200. It contains several pieces of information. A Central Accounting Reporting System, or CARS, control number for Treasury's use. The transaction and effective date. The effective date will normally be the first day of the fiscal year. A statement recognizing the appropriation with the total amount of the warrant. An authorization by a person representing the Secretary of the Treasury. A statement that GAO countersignature is not required. In the past, GAO had the responsibility of co-signing the warrants, but this was changed based on a joint regulation number 5 between Treasury and GAO. This statement documents that agreement. The receiving agency and bureau. The appropriating legislation, in this example, the public law. The full title of the act, and the statute or stat reference, which is the volume and page number in the statutes at large, which reflects this appropriation. More on this when we discuss information needed to request a warrant. The account receiving the warrant, and of course, the amount. Let's focus for a moment on the expenditure account number. In this example, 75171700, to see how this is assigned. It starts with the appropriation. When we look at the appropriating language in Title II of the Labor, Health, and Human Services, Education, and Related Agencies Act. The GAO definition of an appropriation account is the basic unit of an appropriation, generally reflecting each unnumbered paragraph in an appropriation act. In this example, here is our unnumbered paragraph. So Treasury assigns a separate symbol to represent the account, titling it Healthcare, Research, and Quality. We find this Healthcare Research and Quality account in the Agency for Healthcare Research and Quality Bureau within the Department of Health and Human Services in the FAST book. Let's take the symbol apart. The first 2 digits identify the agency, in this case, HHS. All HHS Treasury symbols begin with 75. You may also see the agency identifier with a 0 preceding the 75. The last 4 digits identify the account, Healthcare, Research, and Quality. The combination of these digits forms the Treasury account symbol, or TAS. Returning to the warrant, we can see that the account has the 75, indicating the account belongs in HHS, and the 1700, identifying the account as Healthcare, Research, and Quality. But what about the 17 in between? The 17 is referred to as the availability code. Let's spend a few minutes on this concept. Because Congress stipulates in the Appropriation Act how long the funds are available for obligation, it's important that the Treasury account reflect this in the warrant. How is this determined? The first thing to remember is that all funds appropriated in annual appropriations acts are considered to be annual, that is, available for only 1 year, unless specifically stated otherwise. There are 3 reasons for this. 1. 31 U.S.C. 1301 C.2 stipulates that an appropriation in a regular annual appropriation law may be construed to be available continuously only if the appropriation expressly provides that it's available after the fiscal year covered by the law in which it appears. 2. Each annual Appropriation Act title includes language making appropriations for the fiscal year ending September 30th, in this case, 2017. And 3. There is a general provision at the end of the Appropriation Acts stating that no part of any appropriation contained in this act shall remain available for obligation beyond the current fiscal year unless expressly so provided herein. So, in the absence of any language making the appropriated funds available for more than 1 year, it's presumed the funds are annual, that is, available for only 1 year. So here is our Agency for Healthcare Research and Quality example. Because there's no language making the $324 million available for more than 1 year, the period of availability is only 1 year. Since this is an example of a 2017 appropriation, this is indicated by the 17 between the agency identifier and the 4-digit account symbol. By adding the period of availability, the Treasury account symbol, or TAS, becomes the Treasury Appropriation Fund symbol, or TAFs. You should be aware that OMB uses a slightly different format for the TAFs. The code has the 4-digit account symbol in the middle and the period of availability at the end in a 4-digit format. This is the format used by OMB on apportionments and reports. Well, how does Treasury identify periods of availability in excess of 1 year? Well, there are 2 distinct ways. The first is the multi-year account, and the second is the no-year, or X account. Let's take a look at an example of a multi-year account first. The appropriation language for the Refugee and Entrant Assistance Account reflects $1,645,201,000 that shall remain available through September 30th, 2019. By checking the Fastbook, we find the TAS 75-1503 for the Refugee and Entrant Assistance Account. Since our sample appropriation was made in 2017, the period of availability begins with 17 and extends to 19, separated by a slash. The OMB version puts the period of availability at the end, again in a 4-digit format. The no-year account has language like remain available until expended. You may also see without fiscal year limitation. When Treasury sees this language, they know to issue the warrant to a no-year or X account. The Fastbook indicates that the TAS 75-1501 identifies the payments to states for Child Support Enforcement and Family Support Programs account. The period of availability is indicated by using an X between the agency identifier and the Treasury symbol. As in the previous examples, the OMB version reflects the X at the end of the TAFs. What if the appropriation language only makes some of the appropriation amounts available for multiple years? Let's take another look at our Refugee and Entrant Assistance example. Notice that Congress appropriated a total of $1,674,691,000, but only $1,645,201 is available until 2019. What happens to the rest of the appropriation? In the absence of any other language making the funds available for more than 1 year, the default 1-year availability applies. In these types of cases, Treasury has to do the math by subtracting out the amounts available for more than 1 year and warranting the difference to an annual TAFs. So, we have the total appropriation, less the amount available in a multi-year 1719 account, leaving the remaining $29,490,000 in a 2017 annual account. Let's take a look at the Treasury Warrant for the Refugee and Entrant Assistance accounts. Note that the $1,645,201 warranted for the Refugee and Entrant Assistance multi-year account and the $29,490,000 for the annual account. We can also see the $3,010,631,000 warranted to the Child Support Enforcement no-year account. How do warrants get issued? Do federal agencies have to ask for warrants, or does Treasury issue warrants automatically? Generally, Treasury will automatically issue Treasury warrants for amounts in annual appropriations acts, including supplementals, as we can see from these instructions in the Treasury Financial Manual. But there are occasions where Treasury does not automatically issue warrants, and the agency has to request them. These include permanent appropriations. Treasury warrants for appropriations enacted in other than annual appropriations acts, referred to as permanent appropriations, must always be requested by the responsible federal agency. Here are a couple of samples of Affordable Care Act appropriations that require warrants to be requested. Since these types of appropriations are scattered throughout thousands of pages of permanent legislation, Treasury cannot be expected to scour these pages and therefore relies on the responsible federal agency to determine amounts to be warranted and request them. Advance appropriations. Advance appropriations have to be requested. Advance appropriations are those made in one fiscal year for the succeeding fiscal year. In HHS, we have 3 accounts that have advance appropriations: Medicaid, child support, and foster care. In these examples, these amounts were appropriated in fiscal 2017, but for the first quarter of fiscal 2018. Indefinite appropriations. Indefinite appropriations have to be requested as well. Indefinite appropriations are those appropriations that have such amounts as may be required or such sums as may be necessary language, establishing the amounts appropriated. It should be obvious that Treasury can't issue a warrant without knowing what the amount is. Such requests, like this retirement pay and medical benefits for commissioned officers, and the payments for foster care and permanency accounts shown here, typically require the submission of an approved apportionment with the warrant request, so that Treasury is assured OMB agrees with the amount requested. Rescissions. Rescissions also require an agency request. Again, Treasury cannot keep up with all enacted rescissions. Many appear in general provisions of appropriation acts, like these examples, and simply refer to amounts appropriated in a particular statutory reference. If Congress enacts across-the-board rescissions, like this example, Treasury depends on the agencies and OMB to determine these amounts and submit a request for negative warrants. The across-the-board rescissions are typically done with an OMB max collect exercise in order to simplify the process. Appropriations from unavailable receipts. Remember the unavailable receipts we talked about in HHS special funds, like the 10-year Pediatric Initiative Fund and the Cures Act? Recall that available receipts, like CRADA receipts, are available to be spent without further congressional action. These were identified by a double asterisk in the FAST book. Making such receipts available without further action obviates the need for a Treasury warrant. But accounts with unavailable receipts must request a Treasury warrant when the conditions required by the authorizing legislation are met. Let's look at an example. In 2014, Congress passed Public Law 11394, the Gabriella Miller Kids First Research Act. This act transferred funds originally made available to finance political party conventions to a new special fund called the 10-Year Pediatric Research Initiative Fund, receipt account 5736. These funds were not immediately available and could be used only to the extent and in such amounts as are provided in advance in appropriation acts. Because the use of these funds required further action by Congress, by definition, such funds are classified as unavailable. When Congress gives this authority in appropriation language, as we see in this portion of the NIH Office of the Director Appropriation, these funds become available and require the issuance of a Treasury warrant to the special fund. Such warrants have to be requested by the agency involved, in this case, HHS. Similarly, the 21st Century Cures Act in 2016 established innovation accounts, or special funds. The NIH language is shown here, but stipulated that these funds shall remain unavailable until such amounts are appropriated, thus requiring subsequent action by Congress to spend the money. Here are the receipt accounts established based on this legislation. In subsequent appropriations action, funds were appropriated to the expenditure accounts indicated. Since a later action by Congress was required, Treasury warrants had to be requested and issued. To summarize, special funds are made up of receipt accounts and expenditure accounts. Receipts that do not require further action by Congress are referred to as available and do not require a Treasury warrant. However, if further action is required by Congress, these receipts are referred to as unavailable until that action is taken and do require the issuance of a warrant, which has to be requested. Let's take another look at our GAO definition. Note the additional language. Warrants for currently unavailable special and trust fund receipts are issued when requirements for their availability have been met. Roughly 40% of HHS warrants are requested by the department, and 60% are automatically issued by Treasury. What information is needed to request a warrant, and where can I find it? In all these cases where the federal agency has to request a warrant, permanent appropriations, advance appropriations, indefinite appropriations, rescissions, and appropriations from unavailable receipts, Treasury regulations require federal agencies to provide the following information in a letter or email: the amount, the legal authority, and the Treasury account. Let's spend a few minutes discussing how to find the legal authority required in warrant requests that are submitted by the responsible agency. The first thing to remember is that Treasury will not issue a warrant unless they can see the law appropriating the funds. So, what's the best way to refer to laws? Treasury prefers to see what is known as a stat reference on a request. What's a stat reference? When legislation containing appropriations is passed and signed into law, The Office of the Federal Register in the National Archives and Records Administration assigns a public law number. This is initially published as a slip law. Here's an example. Note that this legislation is assigned Public Law Number 114-113. That number is derived by the number of the Congress passing the bill, the 114th Congress, and the serial number of laws passed during that Congress. Put another way, Public Law 114-113 is the 113th law passed by the 114th Congress. How do we know it's the 114th Congress? Well, here's a way of figuring it out. Since Congress lasts 2 years, simply subtract 1789, the year of the first Congress, from the year the Congress ends, and divide by 2. For example, to determine the Congress that ended in January 2017, subtract 1789 from 2017. This equals 228. 228 divided by 2 is 114. That tells us the 114th Congress ended in January 2017. The current Congress lasts until January 2019, making it the 115th Congress, and so on. These slip laws are then arranged by public law number and are cited by volume and page number in the statutes at large, which is a permanent collection of laws enacted during each session of Congress. Under the provisions of 1 U.S.C. 112, the printed edition of the statutes at large is legal evidence of the laws. The government printing office maintains a web page on the statutes at large. So, if we take another look at one of our sample Treasury warrants, we can see the stat reference on the warrant identifies the page in the enacted appropriation where one can find the amount appropriated. In some cases, however, especially in permanent appropriations, using the stat reference as the citation can be problematic. For example, when appropriations appear in permanent law instead of annual appropriation acts, the original appropriation frequently is amended, either extending the appropriation or changing the amount. These extensions and changes appear in subsequent permanent law, making the final amount a bit more difficult to piece together using the statutes at large. Here's an example. Funds for abstinence education were originally appropriated in fiscal year 1996. But since the appropriation lasted only until 2002, in fiscal year 2003, an amendment was passed extending the appropriation through 2003. Other amendments extending the appropriation were passed in 2010, 2014, and 2015. If you wanted to use stat references, you would need to cite both the amending legislation as well as the legislation being amended in order to properly document the appropriation, since the amending legislation doesn't always include the amount. But there's a better way to cite these types of permanent appropriations by using the United States Code. The U.S. Code is the official consolidation and codification of general and permanent laws. It's prepared by the Office of the Law Revision Council of the House of Representatives. Where the statutes at large organize laws by Congress chronologically, the U.S. Code organizes laws by subject matter, eliminating expired and amended sections. U.S. Code citations are formatted as follows. They begin with the subject matter title, in this case Title 42, Public Health and Welfare, then the initials USC, standing for, of course, United States Code, and then finally the section number. In cases where the section number is subdivided, the citation would include the appropriate paragraph containing the appropriation, as we see here. Note that although the codified language leaves out expired and amended sections, the U.S. Code does include as notes all the relevant legislation and amendments. It's also noteworthy that the amending legislation refers to the relevant U.S. Code, so it's clear where the codification can be found in the Code. What do you do if you need to request a warrant and the law has not yet been assigned a stat reference or a U.S. Code citation? You should simply cite the public law number and title, division, if applicable, and specific appropriations subcommittee title, as we see in this example. What happens with warrants under a CR or in cases of error? We now know that Treasury automatically issues warrants when an appropriation act is enacted. But what does Treasury do about warrants under a continuing resolution? The answer can be found in Part 2, Chapter 2000, Section 2025 of the Treasury Financial Manual. As a rule, Treasury does not issue warrants for short-term continuing resolutions. It's a workload issue, since amounts ultimately appropriated invariably end up different than amounts available under a CR. Warrants would have to be issued and then adjusted at a later date. This creates a huge, unnecessary workload for the agencies requesting and Treasury. But note the exceptions. If the CR covers specific mandatory payments, or if the CR lasts more than 6 months, they may issue them on a case-by-case basis. Of course, they would have to be requested by the federal agency, as Treasury would have no idea what the appropriate amounts might be. If a CR is extended for the full year, at that point warrants would definitely be issued, based on the department's request. In these cases, like the across-the-board rescissions, OMB provides a max collect exercise in order to simplify the process. What if an error was made on a warrant, or you failed to ask for sufficient resources, or you got too much? During a fiscal year, an agency simply needs to ask Treasury to adjust the warrant, up or down. But if the year is over, then a change requires a backdated warrant process. And yes, there's an app for that. Treasury backdated documents adjust previous fiscal year activity in order to ensure that budgetary transactions are booked against the fiscal year in which they were incurred, so they can be reconciled to the legal period of availability of appropriations. This process is done through an OMB max collect exercise. Backdating is done only for amounts in excess of $500,000, that is, that round to $1 million. This process is necessary to prevent recording prior fiscal year activity as current fiscal year activity. Making sure appropriations are recorded in the proper year is a good segue into the next topic. Where do Treasury warrants fit in the budget execution process? Recall that the definition of a warrant says that it establishes the amount of monies authorized to be withdrawn from the central accounts that the Department of Treasury maintains. That means the Treasury warrant has to equal the amount appropriated. Let's suppose an appropriation is enacted for $1 million. In the accounting system, 2 transactions have to be recorded. The first is the transaction establishing the budgetary account appropriations realized of $1 million. The second transaction is the proprietary entry for the warrant. This establishes a fund balance with Treasury of $1 million. Proper federal accounting requires that these amounts be equal. As funds are paid out, there are balancing entries as well. First, there is a budgetary entry for paid obligations. And then, on the proprietary side, the fund balance with Treasury is reduced. Let's use a diagram to illustrate this. This diagram represents budgetary accounting throughout the life of the appropriation. The resource is the enacted appropriation, the $1 million, and the budgetary accounting entry, appropriation realized, establishes this. In budgetary accounting, the emphasis is on fund control of obligations. So note that the resource stays the same throughout the period of availability. In this example, 1 fiscal year. The light and dark green shading together represents amounts obligated. The light green shading represents amounts obligated but unpaid. The dark green shading represents amounts obligated and paid. The white portion represents amounts that have not been obligated. At the end of the period of availability, paid obligations are closed out, leaving only obligated, unpaid, and unobligated balances. This pattern continues throughout the expired period of 5 years. Proprietary accounting is concerned with the appropriation as an asset. So, if we overlay our diagram with the fund balance with Treasury established using proprietary accounting, we can see that we start with an entry called fund balance with Treasury, which is equal to the amount appropriated. Fund balance with Treasury is established by the Treasury Warrant, which represents the amount authorized to be withdrawn from the account. As obligations are paid and funds are withdrawn from the Treasury, the fund balance goes down. Note that our fund balance with Treasury tracks with our obligated but unpaid and unobligated balance throughout. This combination is referred to as the unexpended balance. This dual track of accounting with budgetary and proprietary entries continues throughout the life of the appropriation. Agencies' accounting entries must maintain the equality of the unexpended balance and the fund balance with Treasury throughout the life of the account. So we can see the significance of the issuance of the warrant in establishing the fund balance with Treasury. Where can I find copies of Treasury warrants? Okay, what if you need to find out if a warrant has been issued, or you want to see what citation was used to request a previous warrant? How can you do this? There are a couple of ways to do this. If you have access to Treasury system, you can get copies of warrants using that. Since many of you will not have this access, a better alternative is the OMB Max system, which provides a report on warrants in 2 different locations. Let's take a look. Let's start with the HHS Budget and Performance News page and pick the Budget Execution Reports. Here we click on Appropriations Warrants Report. We pick the PDF icon for the warrant detail of the fiscal year we're interested in. In this case, let's pick 2017. Now be aware that this report has warrants for the entire government. So we'll have to search for what we're looking for. So if we do Control F and we type in healthcare research and click Next, it will take us to our warrant for healthcare research and quality. This is our AHRQ example we had earlier. We can see all the relevant information from the warrant in this report. We can see the title, we can see the TAFs, the citation at 131 Stat 529, and of course, the amount. If you would like to have a spreadsheet with this amount, you can select the Excel icon under Warrant Detail for 2017. We'll open the file. This produces an Excel spreadsheet, which can be particularly useful in developing statistics on the numbers of warrants, types of accounts, and so forth. I used this report in preparing the materials for this video, for example. If you would prefer to focus only on warrants for your accounts, and you have access to the OMB Max apportionment application, you could use the Treasury Warrant report in that application. So starting at the HHS Budget and Performance News page, if you go to Execution Apportionment System, click on the Excel Reports icon in the Run Reports portion of the navigation pane. Let's look for our AHRQ warrant from fiscal year 2017. We'll pick AHRQ for our bureau, and of course the warrant report. We'll click on Run Report, and of course we'll open it up. And here we can see the warrant information that we're looking for. The Healthcare Research and Quality account, TAF 75-17-1700, the stat reference, and the amount. That about wraps it up. Here's a page of useful links that I've referred to throughout the video that you may find useful. Good luck. The GAO glossary is at www.gao.gov/products/GAO-05-734SP. The Treasury Financial Manual chapter on warrants is at www.tfm.fiscal.treasury.gov/v1/p2/C200.pdf. The fast book is at www.fiscal.treasury.gov/FS reports/REF/fastbook_home.htm. And the U.S. Code can be found at http://uscode.house.gov.